Welcome to Behind the Org Finance, the channel where we break down banking, finance, insurance, and global money topics in simple, practical ways. If you want to understand how money moves, how banks work, and how to make smarter financial decisions, make sure to subscribe and hit the like button. You won't want to miss our weekly finance insights. At their core, banks are financial intermediaries. They take deposits from customers, which are essentially loans from you to the bank, and offer interest in return. But banks don't just store money, they use those deposits to make loans to individuals and businesses, generating profit in the process. For example, if you deposit $1,000, the bank might lend $900 to someone buying a home. The borrower pays interest, the bank keeps a portion, and you earn interest too. This system, called fractional reserve banking, powers both banks and the economy. Banks offer more than deposits and loans. Common services include savings and checking accounts, safe places for money, loans and mortgages, funding for homes, education, or businesses, credit cards, short-term lending with interest if unpaid. Investment services grow wealth through stocks, bonds, and funds. For instance, a small business may take a loan to buy equipment. The bank earns interest, the business grows, and employees benefit. Everyone wins when banks function properly. Banks manage risk carefully. Loans can default, and withdrawals can spike unexpectedly. That's why banks keep reserves, a portion of deposits stored in cash or at the central bank. Central banks, like the U.S. Federal Reserve, regulate banks to ensure stability, setting reserve requirements, monitoring lending practices, and acting as a lender of last resort during crises. Think of banks as bridges, connecting depositors with borrowers while navigating risk and regulation to keep the financial system safe. What does this mean for you? Your deposits aren't just sitting in a vault, they're actively fueling the economy. Understanding loans and interest helps you make smarter financial decisions. Choosing high-interest savings accounts or low-interest loans can improve your personal finances. For example, knowing how loan interest compounds can save you thousands in unnecessary payments. Banks aren't just buildings, they're the engines of economic growth, connecting people, businesses, and communities. If you found this video helpful, subscribe, like, and turn on notifications for Behind the Org Finance next. We'll explore the secrets behind insurance companies. Don't miss it.